We're going to work on Kragger, and we've got to solve for how many machine hours were used. So we need some number here that has machine hours in it so that we can try to solve for the missing piece. So overhead applied, would we have used machine hours to apply overhead? We would have. How about actual manufacturing overhead costs? No, that's just the bills that were added up from the rent and the utilities and supervision and so forth. So that's not going to be based on actual machine hours, and we have the applied rate. So we know that actual machine hours times the rate is going to give us the applied overhead, right? And we have two of those three things. We have the applied overhead, the 405.90, and we have the rate, the 41. So we know that actual machine hours times the 41 gives you the 405.900. So then we can solve for actual machine hours. $9,900. The next thing they want to know is what's over under applied overhead. So let's set up the T account here for overhead. Here's my T account, and we applied. They tell us how much we've applied. 405.90. They tell us the actual, and so we have under applied by the difference. What is the journal entry to record that under applied? In other words, we need to credit the overhead and debit cost of goods sold for the under applied amount. Let's do that. So here is the bones of our journal entry, and we know the amount that we need to debit cost of goods sold and credit overhead control. So there you have it.